This episode of the Treasury Whisperers Talkcast podcast is sponsored by Alacriti, helping financial institutions and businesses modernize their payments infrastructure and deliver a unified money movement experience to their customers. For more information, see alacriti.com. That's ALACRITI.com.
Welcome to the Treasury Whisperers Talkcast podcast, your go-to source for insightful interviews and dynamic panel discussions in the worlds of treasury, banking, payments, fintech, and much more. Here now is your host, the Treasury Whisperer, Seth Marlowe.
Hello, Whisperees. Joining me today in the Whisperer studio are Deepak Kapoor and Stuart Bain. Deepak Kapoor is a Senior Vice President and Head of Payments Product at Huntington National Bank, where he leads payment product strategy across treasury management, merchant services, embedded banking, APIs, and other modern payment capabilities. Prior to Huntington, Deepak held senior roles at KeyBank, Fiserv, and American Express. He is an engineer by training and holds an MBA. Stuart Bain is a Senior Vice President of Product Management at Alacriti. He works with business development and sales teams to define Alacriti's payment processing product roadmap, provide analysis for new products, and enhance existing products. Prior to joining Alacriti, he led several teams responsible for the development and support of multiple payment-related applications at HSBC. Stuart holds a BSc degree in Geological Sciences from St. John's College in the UK and a second BSc in Financial Services from the University of Manchester Institute of Science and Technology. Deepak and Stuart, welcome to the Treasury Whisperers Talkcast podcast.
Good to be here, Seth.
Thank you, Seth.
Great to have you both. So as I start our shows, I usually start probing a little bit as to how my guests have actually ended up in the payments world. And it's actually one of the fun parts because generally find out that most of us never intended to be in this world of treasury, banking, and payments. Most of us kind of fell into it in one way, shape, or form. So Deepak, let me start with you. How did you end up in this world?
Yeah, I can't say I was born to do payments, but I've been doing payments for as long as I remember now. My background, I started with the card side with American Express for a long time. And then when Fiserv was first data was going through its transformation, that's where I got into, non-card payments, I would say. And, first data transformation was an interesting challenge for all of us who were there. A very large company that needed transformation. That's what started my journey. And I was pretty blessed to have a lot of breadth at Fiserv, given what they were looking to do at that point of time, looking at all of their North America pricing and from both the issuing side, acquiring side. And that gave me a ton of experience in payments. And that's the start of my journey on what we call non-card payments. So,
all right. Thank you. Stuart, what about you?
Yeah, with my degree in geological sciences, it's not absolutely a natural fit, really. But it was a choice of getting a job or working on oil rigs, and I really didn't fancy being a derrick hand. I joined HSBC or Midland Bank as was basically straight from college and started out perfecting mortgage securities. I discovered I had an aptitude for logical problem solving, moved to IT, moved to operations, moved back to IT, and it was one of those sliding doors type moments. I was taken into a room. I'd been there for a good few years, and they said, do you want to work on this special project? It will involve some travel. You have to give me a yes or no right now. We can't tell you anything about it. I was like, okay, sure, yes, okay. Do you have a passport? Yes, right. Well, we're on our way to California in 2 weeks' time. So it was the time when HSBC had a partnership with Yahoo to run their version of PayPal, and they'd chosen me to be one of the systems analysts on the project to work out how to put it all together and run it in the US and Hong Kong and the UK. So that's why I ended up in America at the end. Stayed around at HSBC for a good few years doing essentially skunkworks types payment projects, the special non-standard stuff that large clients need that bank systems don't tend to be able to do. And in the end, I was offered a position to bring the Alacriti OrbiPay first version of it, the electronic bill presentment and payment solution, to market by Alacriti. And that's how I ended up where I am today. And I've been with Alacriti for probably going on 16 years now, having launched the product and seen it grow over the years to what it's become today.
Great. Well, thank you, Stuart. Maybe tell us a little bit more broadly about Alacriti as well.
So Alacriti is essentially a payment fintech founded in 2003. We go to market with a OrbiPayR money movement platform, which is a single Alacriti developed platform for all the money movement use cases that both financial institutions and billers would need. The first solution was electronic bill presentment and payment, EBPP, which is the solution that Huntington's using. We added to that a payout solution, which pairs up for the insurance use cases. And then the lead product now really is the payment hub, which is the service sold to credit unions and FIs as their one-stop money movement solution for FedNow, TCH/RTP, FedWire, ACH, Zelle, Visa Direct. It has all the rail connectivity in one cohesive platform. And we actually helped the Fed go live with FedNow. We processed some of the first live transactions on the network.
Wow, I did not realize that. So a little bit of history there. That's great. All right. Well, gentlemen, I think we will dig right in. So I'm gonna put out a statistic just to get us started. So according to AFP's 2025 digital payment survey, 1/4 to 1/3 of North American B2B payments are still made by check, and that's about 26%. Meaning that there's an awful lot of room for continued payment modernization. And anyone who's listened to my podcast knows that I have been on the soapbox for many years about getting rid of checks. I feel like I've been talking about moving from paper to electronic for probably the last 15, if not 20 years. So with that, I'll start with you, Deepak. What are some of the ways that Huntington is helping commercial customers with trying to drive out checks from the ecosystem, particularly on the receivable side?
It's for various reasons. In the US, people just love checks. There's not a phenomenon in Europe and all that, because I think in other countries and regions, governments have done mandates, and that has forced adoption of more faster rails. In the US, I think checks is still a convenient form and gives people form of control. You don't have to collect ACH information, and then that's been the sticky point. What's pushing folks away from checks naturally is obviously the check fraud. It's the easiest ways to fraud you if you write a check and you're providing all of your details on it. But I think what we're doing also outside of that is more modern payment rails. Right. So there's a bunch there, instant payments, whether it's, RTP, FedNow, move to virtual cards. So that's just on the rail side, but also embedding into our customers' workflows. So the point is, if you're approving an invoice or you're giving your customer more options to pay you digitally, starting upfront in your shopping carts or upfront in your invoicing cycle, you have a better chance of influencing that process versus saying, hey, just cut me a check. So a lot of our effort is just go upfront in the workflow and do more on that side. And this is where, for example, an invoice presentment, EBPP or BPay platform comes in and saying, hey, now I'm in your workflow. My systems are part of your workflow. And now it's easier for you to adopt the payment methods that we are suggesting. I think that's one big strategy outside of just educating customers around the cost of fraud and delays and, obviously collecting faster and all that stuff.
Sure. Stuart, from the Alacriti side, sort of the same question, but more tailored to how's Alacriti helping the banks and credit unions with trying to solve for these payment issues?
Yeah, so from our perspective, we obviously launched with a more retail-focused bill presentment and payment solution, but the product evolved to support invoice presentment and payment, as Deepak referred to. And we're actually seeing that growing, being driven by bank resellers like Huntington and the other 7 banks that want to offer the service. It's a slightly different model. It's low volume, high value payments, but we're starting to see more and more adoption, and essentially our roadmap's being driven in part by that. So we have a solution. It's going to evolve over time to add on features. I think one of the things that we're seeing is that the clients are more open to accepting cards, and the people paying them want to use cards as well because of the precious rewards. So we're starting to see changes around, well, we want to do surcharging, for example, which I think we talk about later on, but also full support for level 3. Visa's made this change with the Visa CEDP program, which requires a lot more data, but it does allow the merchant effectively to get much better interchange reduction if they can supply enough data to be able to do that. And that's sort of driving that growth, because eventually the paper checks that they're not going to go away eventually, Seth, sorry, but there's always going to be that guy that writes a check. And so that's what we're actually seeing. What's interesting is with the work that we're doing on the bank bill pay send, we're having to deal with checks because it's a pay anyone solution and it's going to have to service both small businesses and retail. There are options for electronic checks there. There's options that people I don't think are aware of, like the ability to email a check straight to the person you want to pay rather than printing and mailing it. There are some services that allow you to drop electronic records straight into a lockbox. So we're actually looking at doing that as part of the overall solution rather than relying solely on printing and mailing a check, which obviously has the high levels of fraud and everything we've talked about.
Right. I think one of the things that is actually scary out there is when you get to talking about things like lockbox and mailing checks, is that one of the biggest sources of fraud is mail being intercepted, not only by I'll say it, the common criminal that may actually be phishing into mailboxes, but I heard a statistic a couple of years ago that upwards of 60% of applications for jobs at the U.S. Postal Service were for people that were looking to get in explicitly to be able to steal the mail to get their hands on checks, credit card numbers, gift cards, and the like. So it's really a scary proposition.
And you get paid for doing it as well.
That's right. And if you're there long enough and don't get caught, you can get a pension too. So it's a triple win, I suppose. Let's talk about some of the integration challenges. Deepak, you talked about integrating with customers' workflow. I know there are a lot of efforts to get integration between bank platforms and ERPs. TMS platforms, treasury management system platforms are in the mix, and they're likewise trying to integrate with the banks, and they're trying to integrate with the ERPs. How do you see this shaking out to be able to simplify a consistent workflow that kind of cuts across the bank, the TMS, the ERP, and getting to that I'll call it the meaty data that's really needed, especially when you're looking at things like the level 3 data that's needed for the credit card payments?
Absolutely. I think we are in what we call integrated economy. People call it embedded payments, embedded banking. You can't be in a customer's workflow if you're not connected to their systems, call it ERPs, treasury management systems. So at least in Huntington, our concerted strategy is to build our connectivity to as many ERPs as we can, build partnerships. We've done partnerships with the TMS systems to build similar connectivity. So that's one piece of it. The other piece, which actually is harder, is your second point of getting payments-rich data in and out of the systems and back to the customers, right? So, and this is where we've had to invest a lot of time and effort in building our payments transactional data store, as we call it. And so combination of all of that is what we call Huntington's connectivity ecosystem. And the idea there is we should connect to our customers' systems, ERPs, treasury management systems, as well as pass data in and out of that. And in fact, we've done some work with Stuart's team and Alacriti in building some very custom integrations with some of our insurance firms as examples, where we've connected to their insurance ERPs to then enable payments, money in, and then, give them information back. So it's a journey, but it's pretty exciting journey for us. And I think that's a very clear way of helping the customers really improve their workflows versus, hey, send us a file, which then you're at the back end of it.
Right. How much does reconciliation play a role in all of this for corporates to be able to, I'll call it, balance the books, balance even individual payment transactions that may come in and may not even come close to matching what an invoice looks like? How are you guys helping your customers that way?
I'll start, and Stuart, you can add.
Sure.
From banking perspective, recon is making a payment happen both in and out is just one thing. But if our customers will tell us if we don't provide them the recon data, then those payments end up in a suspense account from a GL perspective.
Right.
Our customers have teams that's only job is to do recon. So where is my cash balance? Where's my payment status? Did this invoice get paid or not? And just getting the payment data back that's rich is very high priority. Stuart, what additional stuff would you add to that?
Yeah, I think one of the reasons that Biller Direct the EBP model has become so popular is that you get that automatic match between the payment and the bill because the two are inextricably tied together, especially if you're authenticating against data. So you don't end up with random transactions on account numbers that somebody's fat-fingered when they've made the payment. So I think that's one of the reasons that it's grown, the ability to see your bill and things like that, but provide that rich data set back. Especially with the real-time integrations, the approach that we've taken is to separate the data from the dollars. So you can say, hey, post a payment of $363 to my insurance policy, but then provide the biller with that much richer data set of how it was paid, the type of card that was used and things like that, so they can actually use their analytics. So we've basically taken that conscious decision that the data is one thing and the dollars are another, and the two will match back up on the back end.
That's great for the simplification, because I'll tell you, I've been on both sides of these transactions, and when you're trying to match up sometimes dozens, if not hundreds of line items of detail that may be tied to a payment. And God bless the people in the consumer products industry and those folks in the retailer industry who match this up all the time, and kind of lived that when I was the treasurer of the den and water business. Good luck to the person doing cash application to be able to figure out how it all ties back together.
Yeah, I mean,
so any help's always appreciated.
Yeah, it's one of the areas where we're retooling our, it's a reconciliation tool to match bank data with Orbipay generated data. And it's one of those areas where we're not toying with, but looking at using AI to do suggested matches. So, okay, there isn't a perfect match, date, amount, description, but we think these go together. These look like they fit together. So you might have a transaction that got split by some reason manually. These two belong together. So the idea is to basically clear away would basically allow you to identify the exceptions rather than the boring job of going, yeah, where they always match. So we're going to try and do something different there, then use AI to try and make it a bit more intelligent matching than just these match, these don't.
Right. Well, a funny thing happens on the way to all of the ticking and tying is that the people that generally are in those jobs, they actually enjoy the ticking and tying.
Yeah.
It's the exception management that stresses them out. And one of the big change management issues when these kinds of platforms are put into place is that the people doing the job realize that the job is changing very quickly into exception management. And very often they're not very happy about that.
Some people do what they do. I think there are people that prefer the exceptions rather than the mindless spreadsheets, but hey, you do you.
Right, exactly. So let's talk about how EBPP fits in across the broader spectrum of receivables. Stuart, you've talked a little bit about bill pay. I think you have as well, Deepak. I uttered the horrible, not four-letter word lockbox. How do you help customers bring this all together so it's a total package of receivables management and optimizing that so regardless of how payments come into the customer and come into the bank, that it's easily managed?
Yeah, so from an EBP perspective, our approach is you call it omni-channel, you want to call it integrated receivables. It's had so many names over the past 20 odd years, but I use the term consolidated view, all the payments from all the channels in one place. So from a biller's perspective, all of their web payments are in one place, their automated payments are in one place, their IVR, their call center payments. But we took the position, and again, it was the advantages of working directly with the bank resellers is they have clients with capabilities beyond what our direct clients want. So we have the concept of front office payments, the ability to record cash. Deepak's aware of the work around point of sale device integration. So rather than it being a hodgepodge of discrete systems, we've taken the approach of building everything into one place. So it extends beyond just, hey, we can do your web and we can do your call center. And again, that's obviously going to expand over time as we start to join up our capabilities together. Now, we can do pull-in feeds from external systems. We have several clients loading in. Essentially, they get that EDI 820 from their bank, and they give us a file to load all of their checks into it as well. We're not processing the payments, but we're recording them and showing them alongside everything else. The CSR, when the customer phones in and says, hey, did my payment post? They can go to one place and see all of the transactions. And I think that's the unified strategy is deal with all the big direct stuff, but then look at where are the third-party payments coming from. Do you take cash payments? Where are they coming from? Can we integrate with the provider to put those in front of your CSRs? So you're not having to sign into this system, and this system to try and work out how your customer paid you. Deepak?
Right.
Yeah, I would just say it's the omni-channel solutioning, which is, hey, I'm gonna work for you in all your channels. It's the helping you reconcile your banking data because, to your point, money is going to come in different forms. Came in through lockbox, came in through cash, came in through card, came in through ACH, and giving them a single file back for AR as an example. And then I think just that's kind of, to me, like kind of phase one or like the early maturity. The more mature firms are then looking to do AR analytics. Like, how can I reduce my, time to collect, what's my pending AR, all of that stuff. The collections piece becomes very important. But I think you can do that, to your earlier point, if you can take time away from just trying to do the basics, recon, to, hey, now let me do forward looking. How can I collect faster and collect more?
Mm-hmm.
So as we think about helping customers, I think it's those kind of, call it like 3 stages of grief of like, basic integrations with, one channel, bank level, full reconciliation, and then more like forward looking, even predictive, I would say, view on how their AR is looking. And especially in certain set of customers, like mid-market kind of companies, that's a lot of value. Now, if you're a GE or a Google, that you're doing your own stuff, you have large teams doing very complicated stuff. But in like what we call regional banks, regional banking customer, SMB, mid-market, I think that is very value add. So.
Yeah, I think the other thing I would say is that even the smaller customers are expecting the features and functions from their bill pay platform that the big customers have had for years. And that's the thing that we've seen is even a small hardware store really expects that multi-channel experience for their consumers because they want to be able to meet their customers where their customers want to pay them. Do you want to do a last minute credit card payment without logging in? We've got you. Do you want to do a phone payment? It's automated. We've got you. So I think the idea is that there's becoming this sort of not homogenization, but capabilities that were normally the reserve of your Verizons and your AT&Ts are now becoming downstream into the smaller billers. And to a certain extent, some of the smaller billers are actually offering more options than some of the larger billers. I'm not looking at banks' auto finance repayment options here either in any way, any manner of means.
So, gentlemen, how is AI creeping its way into the receivables landscape for the corporates?
AI is happening at multiple angles or multiple places. When customers themselves are starting to adopt it pretty aggressively, we are, like, for example, working with Alacriti and partners like Alacriti, building AI into our own workflows. The key thing is like having data, right? So AI works better if you have better data and all that stuff. So I think the critical piece that we're all finding or making sure happens is we're enabling AI on a data set that is, richer and all that stuff. But we expect our customers to, eventually have what they call, AI-based skill boxes. And, if your job is recon, you come in the morning and just say, hey, help me reconcile, and it just reconciles. If you come in the morning and say, do my cash flow forecast or chase my cash, the AI is connecting with the bank, Alacriti, in pulling all of the data and just doing the job for you. So in a way, what I would say Claude Code would do for a developer, AI could also transform some of the treasury functions to kind of do the work. So that's what we are seeing. Will eventually, that's one of the hypotheses that's where it's going to go. We're starting to see some early signs. Stuart?
Yeah. So, I mean, we have a dedicated product manager for AI that's been doing this for a couple of years, and we're actually running some things internally for our own teams. We've been using code assistants for a while. From a customer-facing perspective, we are trying out AI on top of our online reporting, which has a lot of data, to Deepak's point about it's all about the data. And it's a separate data store from the production system, so it's all sanitized and so on. So we're trying out ideas like, tell me my trend of American Express card payments over the last 6 months. So you could run the report and see that yourself, but why not get the system to do it for you and things like that. We're trying to keep the scope of the AI constrained. I'm very aware of the conjecture that the more you ask it to do, the more likely it is to hallucinate and stuff like that. So we're also trying out some more limited scope features there. We're piloting right now the ability to upload a PDF of payment instructions, say a recurring payment instruction captured when setting up a loan or a credit card, having AI read that and provide the actual payment instruction back to the CSR, so they're not having to type in the routing and transit number in the payment instruction and so on. That requires training. To Deepak's point, it has to be training to recognize the forms because everybody fills them out differently.
Correct.
Yeah. So we're also, it's very, very beta for us. We have an IVR. Everybody has to have one. It's not my favorite payment channel, but we've got a prototype of a full AI IVR up and running that does full voice recognition and full text to speech. You can actually converse like a CSR with the customer making the payment. Still very limited in scope, but the early results are impressive. It's very clean, it's very slick, and it gets away from having to pre-record all the prompts. The customer could just roam around, do whatever they wanted to do. That's not ready for prime time yet, but what we're trying to do is look at those uses of AI that we can keep controls around so it doesn't go off on tangents and start doing things that we don't want it to do.
Right. I would imagine, particularly in the IVR space, that there's a huge opportunity there to get over the multi-language hurdles. What we see mostly in the U.S., Spanish speakers so prominent here, but being able to do that across dozens, if not hundreds of languages. So regardless of who the customer is, they don't have to press buttons on a keypad on the phone to say what language, because there's a limit to how many keys they're going to have to press.
It's the ability to do things like read back the customer's name to them, which a pre-recorded IVR could never hope to do. Things like that. Ask them for the name on the credit card if it's different from the name on the bill. It opens up these whole range of possibilities that a keypad on the phone just can't do, or basic voice recognition can't do. So we're quite excited about that. We're going to take our time with it, though, to make sure it's a useful tool. It may expand one day to be a true virtual CSR. Just tell me what you want me to do. I want to order a new checkbook. Okay, let's go through the process of doing that. But right now we're focusing on the payment experience because we want to offer a better automated phonic payment experience compared to the current IVR that we have.
How does this fit together from the bank perspective when the bank may have, their set of customer care folks? They may have existing IVR for non-receivables activities. How does that all end up blending together so it's a uniform experience? Or does it?
Yeah, no, that's a great question. I think it's just a couple of things. I think it depends on the bank. Every bank has a different build, buy, integrate philosophy. For us, it's a pretty thoughtful process of what we build ourselves, what we partner with. And I think our tech stack is built in a way that, it's modular and we can fit in our partners like Alacriti into the tech stack. From a customer perspective, it's seamless. And I think we break our technology into like what the customer uses versus what our internal service folks use, right? And a lot of our customer payments first platforms, for example, would be, in this case, ABPP, the Alacriti RBPay platform. And we give our customers self-service tools. They can do a bunch of stuff themselves. And a lot of that, our strategy is to leverage, for example, Alacriti front end. It's embedded in our banking platforms. And then we have our customer service team, a similar view. So we've done a decent job of integrating the customer experience, self-service, as well as our service team support. You have to kind of marry the two together and integrate with the banking infrastructure so that for customer it's seamless.
Yeah, I think the thing is that the Deepak's end client, the Clover Insurance Company, they're getting the service for their customers. Their customers don't really know that Huntington's there, or even Alacriti to a certain extent. They're using, because everything's white labeled, they just know they're using the Clover Insurance payment platform. So they get their integrated experience with who they think they're paying and the service that they're being offered. And it's slightly it wouldn't make sense for them to try and access Huntington to make payments, if that makes sense. They may find out that the payments are processed through them, but that doesn't tend to happen. So you've got these discrete sets of technology that work together based on who's talking to who and what they're trying to accomplish.
Stuart, I want to go back to you for something you alluded to earlier on as you were talking about receivables being driven by card. It was the question of surcharging. And I know from having lived this as well, it's a wide open field of what companies want to do to surcharge their customers for card payments, sometimes for non-card payments, maybe different surcharging for both. What's kind of the latest of what's going on there in the industry and the capabilities in these platforms?
Yeah, so we're seeing more and more requests for support for surcharging on credit cards. And it's moving beyond you go to your local pizzeria and it's like, hey, if you use a card, you're paying 3%, or this is the cash price, you pay more if you pay with a card. The other alternate model there that people are looking at more doing it online. But it's a really hot topic. And I think we're starting to see all sorts of rules about interchange caps and surcharge limits. And we're basically adapting our fee engine to be able to support that. Now, you typically see the 3% on 3% model, but we're starting to see some banks explore, we actually want to be actually more compliant, and we want the fee to represent what's actually paid on that particular card. Whether that's the correct way to do it, I don't know. It makes life very complicated. It's another third party that's involved, but all of the compliance is becoming a very hot topic around that. And we're actually in the process of adapting our fee engine to be able to allow banks to ensure their clients are in compliance. So the fee is capped at 2% in Colorado, for example. So if you happen to live in Colorado, you get the benefit of paying a slightly lower surcharge fee. It's going to be interesting to see what the judgment that came down a couple of days ago, but the Visa and MasterCard $38 billion fee settlement, which seems to open things up to more opportunities for surcharging or charging the consumers fees, but also you don't have to honor every single card. You can choose to block commercial cards. So whether that will change what people view it, I'm only going to accept retail credit cards. I'm not going to accept any commercial stuff because that obviously dramatically changes the interchange that's paid. So we're keeping an eye on that. And I found about that yesterday to see how far that progresses, whether there's more challenges about whether it gets through or not. But that ruling seems to have come down with the interchange is going to be slightly lower. You can choose to not accept high ticket cards, because that could really change how we view this and how we go about how a client decides which cards they actually want to accept and then what fee they're actually going to charge. So It's a very interesting topic from
I think
working out what the hell you're going to do perspective.
Yeah. I think one thing to know in this is it's about choice for the businesses. It's choice for the consumers. Like from our bank perspective, it's making sure the cost to the end consumer is not too high. It's making sure our small businesses or businesses have choices if that's what they want to do. A lot of time it's a surcharge because it's providing certain convenience, etc. So I think it's a little complex spaghetti, but the intent for, at least from a bank perspective, is not to push a particular method. I think it's just offering choice to consumers and make sure it's, to Stuart's point, compliant. They know what they're signing up for and paying and why. And merchants, if that's what they want to do, then that's a choice, right? And I think that's very important in this whole play, is just not push a particular method because it's more or less lucrative, but it's about just making sure the choice is there.
Good point there. I want to move our discussion towards the future of what's coming. And I'll start that by some of what's already here, but hasn't necessarily gotten to the degree of ubiquity that I think was hoped for. RTP, FedNow as real-time or instant payment rails, and fitting that into particularly the receivables puzzle. What's that look like today, and where do you envision this going over the next couple of years? Start with you, Stuart. Good. We like them.
So specifically request for pay, which still some people feel is a replacement for ACH, which is need to be disabused of that belief. So it's been, because of the payment hub work that we've done, the ability to support, or the concept of supporting requests for pay for receivables has been on our roadmap for 6 years now. Several obstacles to adoption. Back in the day, there was only one bank you could send them to. So you happened to bank with Citi, we could have built the platform, but you could send requests for pay to Citi, which obviously is not meeting your 80% coverage to make it worth rolling out. The network rules have also been a cause for non-adoption. You can tell that TCH wanted to avoid the Zelle experience with fraud by people rocking up and saying, hey, I'm doing a request for pay from the Red Cross. Please send me $300 and stuff like that. So there's been a lot of work there around compliance. Now, the other driver has been the digital banking platforms and the framework at the receiving institution to be able to tell the consumer, you've received a request for pay from Clover Insurance, and allow them to approve the request for pay and perhaps set an auto approval. We work with Mark Majeski. I know there's a lot of work going on there to how to standardize that. I just keep telling them, just make it work like Zelle request for pay. People understand that. That's what they understand. You received a request from Steve. Okay, I'm going to pay it. The things like that. So in our framework, Now, we keep saying it's going to be Q3, Q4 because it keeps rolling back. But what we're starting to see is some movement here. There seems to be some changes going on. And as evidenced by the recent Truist Zelf biller announcement, which is using a request for pay model. So I think there's starting to be some movement with the owner banks to try and break the deadlock, which is, well, there's so many ways you can't do this, and not very many ways you can. Deepak?
Yeah, I think all that is absolutely true. And I would say, I think goes back a little bit of the workflow. I think if you look at the receivables for land, like there's the buyer initiated and there's the seller initiated, right? And how do you balance out the movement from buyer initiated payment methods to seller initiated payment methods, which is like request for payments as an example. We look on the payer side, like money outside, same thing. Like it's a lot of the instant payments are, payer initiative. I'm paying my Uber drivers, I'm paying my tips right now, etc. So I think it's also building the workflows for you to get into that buyer and seller initiated workflows and then influencing it that way. And I think that's what I see on both sides. So both for money in and money out is as you get into deeper in the workflows, you'll be able to push more of the adoption into instant payments. A hypothesis for us is very simple. If you're doing an ACH payment, you should really be doing RTP payment if your focus is on getting money faster. And so I think it's like market education, but I think it has to come with embedding in the workflow.
Here's my next question. Are companies ready to handle real-time payments on the receivable side when there's an implication and an expectation that a payment that is received off hours, outside of, let's say, the 9 to 5 or Fed wire hours, let's say, or weekends and bank holidays, that they're ready to post those receipts in such a way that there's an immediate impact? But the use case I always think of is a consumer who's gotten a disconnect notice and they've got to pay immediately. And they may be dealing with this at 10 o'clock at night or on Saturday morning. And to try to make sure that the utility, as an example here, actually when they receive that money, it affects the turn off notice so that, the service isn't turned off immediately on Monday morning, let's say. Are companies ready for that kind of capability?
So some of them are. A lot it's very much dependent on the ERP system, to our earlier discussion about ERP or core integrations, but it's also down to the payment processing provider as well. So I used the term separate the data from the dollars earlier. So our approach with our direct clients, and as per Deepak comment, is to build real-time integrations into the ERP systems. That's how we've grown from 0 credit unions to 20% of the credit unions in the space of 5 years. We actively chose to build the integrations into the cores and make them real-time. It's the only way you can do faster payments. So if that's in place, you're all good. I can make a payment anywhere. The payment will flow in and the system will be updated in real time. So the cut-off truck doesn't then set off tomorrow morning to go and cut my water off. The separate thing that I think for the true real-time payments coming in is it's a very different reconciliation process. To go back to our earlier discussion, these things all begin to join together, because rather than getting one deposit of $100,000 for all the ACH payments I did yesterday and $100,000 for all the card payments, if my average payment's $100, I've now got 1,000 transactions settling into my DDA. Most reconciliation systems aren't designed to scale to that. So I suspect what we're going to start to see is the more use of things like sweep accounts and artificial end of day that, okay, well, our nominal accounting is 7 p.m. till 7 p.m. Sweep the money and that's where we're going to reconcile, because the money's going to be flowing across that settlement account constantly based on the funds being received off the networks. So somebody's going to come up with a solution for that that's going to be elegant, and I'm rather hoping it's going to be us. But that's the one thing that I think people will start to see it operate at scale, and they'll realize that they can't manage their reconciliation process, which is based around batch files right now. So it's all of this file versus real time. And I think there's two things that need to happen in parallel for it to become fully widely adopted.
Sure. It makes a lot of sense. Virtual end of day. I love it. Deepak, your perspective on that?
Yeah, look, I agree with Stuart. I think the answer also varies by the type of customer. Your large, more enterprise client versus mid-market versus small business, you have different systems and you need different solutions. And at the top end of the client size, if you really want to automate a lot of this, you bring in things like ledgering platforms, and then so that you can ledger and all that stuff, as Stuart was hinting. And if you're on the smaller side, I think, what we have, the basic technology works. So I think a lot of it is just segmenting your customers and understanding what they might need. And the larger ones would need a bit more tooling to really get to automated. Because at the large end, I think their focus is also about, it's not a liquidity deficit issue, it's a investment strategy, saying, hey, I have surplus cash, let me invest it. Right. On the smaller side, it's mostly like, hey, I need the money now. And it's different problems you're trying to solve for, and hence different solutions. You marry the payments. And this is, I think, where I would say this partnership is really solid for us and Alacriti, is if you marry the payments and banking together, you can solve a lot of problems. But you have to put those two together. If you're only trying to solve payment problems, you really don't solve many. And then same thing for the bank. So I think this kind of marriage partnership just brings a lot to the table.
Great. So last question before we wrap up. So kind of back to the AI world for a second. With agentic commerce coming at us fast and furious, what are the implications of payments being made by agents, agents being on the receiving end, maybe payables agents talking to receivables agents without people, and identifying whether agents are real? Because I think there's another area that the fraudsters are going to kind of find their way into, is deep faking that they're a legitimate agent on behalf of someone.
Yeah, I think I would say early days, lots been done to kind of formalize the protocols for payments. You still have a lot of infrastructure for agent interaction being built or even being debated. The big open items are, how do you manage disputes, to your point? I don't know if the agent had the mandate to buy something, but the agent bought something. Now you want to return it. And is it a legitimate dispute or not? And charge back, to your point. And how do you differentiate that from fraud? There's also a theme of like, how the businesses are discoverable in the agentic land, right? So right now you have a website and a shopping cart. That doesn't make you agentic enabled, right? So there's a lot of this plumbing that has to be sorted. The agentic commerce is real. It's happening. And I think the strong story is like the consumers are trusting it. I think they like it. And you'll see a rapid explosion in the infrastructure in the next, let's say, 12, 14 months.
I mean, we work closely with lots of digital banking partners, and we can see a real use case for agentic type functions in there. Hey, if I receive a bill, you can pay it for me up to a certain amount. So it's like semi-automation. I don't need to respond to a reminder and do things. And we do know that some of the digital banking platforms are looking at doing that. Obviously, there's the liability shift. I never authorized that payment, so I want my money back, please, but I'm keeping the goods that I got delivered anyway. So it's going to be interesting to see how and when the driver's list is going to be the card scheme rules, the Fed regulations, TCH's own rules about liability shift, because I know that was a big sticking point on the whole request for pay, is who's liable if I make a payment by mistake? Well, it's the receiving banks. They approved it there. So I imagine there's going to be some interesting debates around, well, we had one agent talking to another agent and they negotiated a discount on my invoice without anybody's input. So I'm going to pay. They agreed you would accept 12 grand out for 25,000. That's a binding contract. How's that going to be resolved? So it's going to be interesting to see how it plays out. But I can see the banks having to play a major role in this to basically sometimes arbitrate between disputes. And it's going to be interesting to see how that works if you've got two AIs that are disputing with each other.
That's right. Well, I'm sure it becomes a huge new practice area for many law firms as well.
Yeah. But then they'll have an AI lawyer that's dealing with the AI anyway.
That's right. I love it. Gentlemen, great conversation today. Deepak Kapoor from Huntington National, Stuart Bain, Alacriti. Thank you both so much for joining me here today in the Whisperer studio.
Thank you for having us.
So that's a wrap for us today, Whisperees. You can now help support the Treasury Whisperers Talkcast podcast by becoming a Patreon member of the show. See the show notes for details on that. Until next time on the Treasury Whisperers Talkcast podcast, this is Seth Marlowe saying bye-bye for now.
Thanks for listening to this episode of the Treasury Whisperers Talkcast podcast with Seth Marlowe. The Treasury Whisperers Talkcast podcast is produced by the Treasury Whisperer Studio and Treasury Whisperer LLC. Copyright 2025. Any rebroadcast, retransmission, or account of this podcast without the express written consent of Treasury Whisperer LLC is strictly prohibited.
This episode of the Treasury Whisperers Talkcast podcast has been brought to you by Alacriti, helping financial institutions and businesses modernize their payments infrastructure and deliver a unified money movement experience to their customers. For more information, see alacriti.com. That's ALACRITI.com.